Hello my fellow freedom builders, and welcome back to the channel and to a stock of the day video. Now I made another stock of the day video earlier today on the Danish channel where we took Dometic Group from Sweden in, and I promised you an English version as well with a US stock. And here it is. Today's stock is LULU. And if you have seen many of my stocks here, I use the screener. I simply screen for this one down here, stock of the day. Now this is of course it have chosen Danish because that is my language here, but I use a long-term uptrend on TPI and an oversold in TPI weekly. I look for an upside to the analyst estimates at least 10% over the next couple of years, a certain market cap, and that is basically it. So if we take a look at LULU, and I will show it to you in a normal chart and trading view just in a second. But if we take a look at it, it has a decent size. It has around $60 billion in market cap. Some very good earnings quality. I'll get back to that in a second. Some decent momentum. Value is low, but we don't care too much about that in this case because this is actually kind of a result of some very good momentum over time. Overall stock score is 67, so that is okay. We can see that the price earning, we'll use that in a second, that is around the 65 to 70 mark, but projected here, the forecast is that it'll be dropping to 35. We'll have a look at that in the value chart to see what that does to the stock. The quality of the earning is quite outstanding. 51% on return on capital, 27% on return on equity. Some nice margins. We can see the Petrosky F-score couldn't be higher. It's 9 out of 9. It's not often we see that. The bankruptcy risk, the Altman C score, is just saying this is insanely safe. And from the 33 analysts here, we are just saying somewhere between buy and strong buy with some upgrades, revisions in the estimates over time. We can also see that the free cash flow is very good here. We have a drop last year, but then we have some last 12 months here that is very good. So we have a nice free cash flow per share here, so that is good. Some good working capital, and well, basically everything just checks out. This is a decent company. The question is, my point two, is it fairly valued? And let's just remember these 67, 68, and then the forecast of 35. Let's go in here in valuation, and we might have a look at an extra year ahead here. So we're looking at 3 earnings report ahead. As you can see, it is estimated to grow its earnings per share by 82.3% now here in 24, and then 14.6% in the year after. And since we're working with an extra year, let's just put 10% in here. We can play around with that in a second. Now, if we have the forecasted here, the 35 in price earning, that gives us over the next 3 years a 31.4% growth in the price, which is good. It's not that I'm planning on holding it for 3 years, but what we do like when I pop into the TPI chart in a second is that when we are trying to time it, we both want some timing, we want a dip in the price, we want a retracement and then a bounce up, but we also want the fundamental analysts to think that this is a great stock that they can now buy at a cheaper price, because that will help us boost the profit. So this is at a price earning at 35, and there's some fairly conservative earnings, I would say. It had a drop, as I showed you, at 10.8%, but otherwise it has shown way higher than 10% on average. So if we should bump it up to some of these numbers here, we can see that we have a 46.9%. Now, if for some case the investors should still be willing to pay a price earning at 67, well, we would have a potential 177.3% over the next 3 years. Not that I'm counting on that, because I do like that we can basically cut this in half, and we are still sitting on a fantastic case. Even if we use the 10% we started out with here, and we even bump this further down to 30, we still have 11%. How low should it go? Well, a break even over the next 3 years would be a price earning at 27. And as you can see, we basically have never been down there in some of the averages. But even there, and with some low earnings, a lot lower earnings growth lower than the average over 3, 5 and 10 years, well, then I think we are sitting on a fairly good deal here. Looking at the TPI chart, here we have a very decent long uptrend here on the long-term TPI. Then we have an oversold accumulation phase. As you know, this is the kind of the ceiling under the price, and the gray here is the roof above the price. That's how you should see it. Not that it can't go against it. As you can see here, there was a statistical indication that we should soon be seeing a top here, and had you just followed that blindly, well, that wouldn't have been a good deal. You would have exited here and it would just have continued upwards. But there is a statistic, and we have made several videos about that, showing that having a ceiling under it here is definitely not the worst idea. On the contrary. So we have the green here on the weekly chart, and right now we do have a green at the end of yesterday on the daily, but otherwise it has also been green. So on the TPI, long-term green trend, an oversold accumulation, and even a green here on the weekly. We are not looking too much on the daily on this stock of the day. We just want this. We want a good solid valuation, so that we can buy it at a decent price with some good upside potential. And we want in the summary to see that this is actually a good solid company that is not on the brink of bankruptcy or anything, and the management can actually manage to get a good return on equity and capital. That's all, and we're buying it into the portfolio, and let's see where it goes. We might take a loss on it, we might take a win, but overall, if we are looking at the portfolio stock of the day, let's just bump it up here. Oh, that's been a little upgrade here, but as you can see, we are at 8.25% as of yesterday in this, and the S&P 500 was at 7.8. We have lower volatility, we have lower max drawdown, we have better Sharpe ratio, sorry, and overall here lately we have only been around 37-40% invested. And still, we have done just as well as the overall market. So I'm very satisfied with this strategy, and I'll keep tracking it. Let's hope we can keep the CAGR here at 50%, but I wouldn't count on it. We will definitely meet some downturns when market retraces as well. That's all for now. Take care of yourself and your money out there, and I'll get back to you shortly. Bye.